Nick, not very much for the market to focus on. So like yesterday, today again, we were really just directed by what was happening on Wall Street when it opened.
Yeah, Stephen, spot on with the intro. I mean, a very directionless day. Again, taking, as you said, this lead from whatever S&Ps are doing, and the S&Ps are moving up, $1 or $2. You find the all share moving up 50, 100 points, and that's been the theme for a few days.
Of course, the data that we are getting out seems to be pretty mixed at the moment from the United States. We had disappointing retail sales data last week. Today we had some good home sales data and then some poor consumer confidence numbers. So it looks like the consumer confidence isn't really building very fast in the markets at this stage.
No, and I think it needs to be brought in context of a very high, historically, unemployment in America too. It's not surprising to see the consumer not exactly being confident when you've lost 29 million jobs over the last year or since this whole crisis began. So the problem in the detail, Stephen, is that the world needs a strong US consumer. The GDP of America is driven about 2/3 from the consumer. So you really want to see that consumer confidence number coming out. And as you saw the reaction to the market, they're not quite sure how to play this number.
Of course, we've had the dollar strengthening to about 145.50 against the euro, and last week it was trading at 148 for most of the time. So, are we seeing some risk aversion coming into the markets at this stage?
I think you remember a year or so ago, certainly a year ago, when all this crisis broke, the dollar strengthened quite significantly because people said, okay, well, if we can't, where's the safest place to have our money? It's probably with the American government. And typically, when people have an appetite for risk, they go into emerging markets. You see things like tradable currencies like the rand also appreciate. So you do feel like against certainly a strengthening dollar, the commodities are a little bit, it's a bit of a lid on the platinum price. You've seen it sold off the last few days. Our local resource counters sold off. So you do get the feeling in the market, as it is a directionless market, but there seems to be a little bit of aversion to risk coming in.
And of course, gold also back down around $9.99, $95 an ounce, and that's also pushing down our gold counters. I mean, what does this all mean for equities at the moment? Because we have been trading around the same levels for about the past 6 weeks, a few days up, a few days down. I mean, where do you see equities going at this stage?
I pretty much see them going nowhere. We really are treading a little bit of water at the moment, and I think the market is looking for some sort of catalyst to break it up to either the upside or to the downside. It might very well be those unemployment numbers that are coming out at the end of this week. The market needs something to push it either up to the next level or down. Again, there's consumer confidence numbers that we saw today very tightly closed with unemployment, which we'll see later. So I get a feeling we probably won't be having this conversation next week. Hopefully we would have some sort of direction back in the market.
And how about the rising M&A activity? We had those couple of deals announced yesterday which pushed Wall Street higher. Of course, we have that Cadbury Kraft deal still hanging over the markets, and here at home we have MTN Bharti. I mean, do you see this as a sign of rising confidence from businesses at least? It's
certainly a sign of rising confidence, and you want to see M&A activity. Markets want to see people doing deals. As a shareholder, you want to see shareholder value being created. As you said, we saw with Perot Systems last week. We've seen with Cadbury on the deal, the MTN deal. We'll certainly know by tomorrow exactly where we are with that soap opera. So it is encouraging to see M&A activity, but then again, it is selective. It's the companies that have big balance sheets and have got the cash to spend who are lucky enough to be participating right now.